Oh. Dodo. Let's go, let's go, let's go. The first live of the year. Make sure y'all share this video. We're gonna have a conversation tonight. Give time a couple of more people to get on. No PowerPoint today. No PowerPoint today. Strictly conversation. I love my PowerPoints though. But y'all go ahead and share this video to any inspiring business owners, entrepreneurs. Today we're going to talk about startup versus small businesses. I know some people may think it's not a difference, but in the business world, it is different. And we're going to have a conversation about it so you guys can be aware of it. And I believe once I'm done with this video, once you understand it, you will know how to approach your business, even if you're just starting out. We're going to get started in a few minutes. My wife asking if I'm going live. She better be on here too. Few more minutes, we gonna start. Hey Shirley. Got my notes just to make sure I don't miss anything. So give me a thumbs up if you guys on here that can hear me. Give me a thumbs up to make sure we good to go. I don't want to start talking and nobody on here can hear me. If you're on here, give me a thumbs up. I'm on multiple platforms, so I may not see your text. That's why you see me on my phone looking. All right, so we're gonna go ahead and get started. I am TL Williams, founder, CEO of Crowd Wall Street. Hence the jacket, the sweater, Crowd Wall Street University. This is what we about educating our people. So Crowd Wall Street, for those, if you this your first time on this live, first time seeing my face, first time hearing about Crowd Wall Street. We are a crowdfunding platform, Black owned, for minorities, minority founders, entrepreneurs, investors, and developers. Currently right now, we're in the process of raising capital to launch our equity offering. Right now we offering reward based, similar to like Kickstarter or Indiegogo, but we are in the process of launching our phase 2, which is our equity platform, where now you guys get the opportunity to invest in startup businesses and obtain equity ownership of these companies. And also you able to participate in real estate project development deals as well. So this is a more sophisticated way of practicing group economics on another level. Now with technology and internet going on, it's easier now for us to really come together and pool our money together to take advantage of opportunities. Just a few updates before I get started. We just recently launched our brand ambassadors program. If you're interested in becoming a brand ambassador for Crowd Wall Street, it does come with perks. So if you're interested in becoming a brand ambassador for Crowd Wall Street, just send me an inbox and inbox me, tell me you're interested, or one of the team, Jamsky or Shantae, and we'll let you know how that works. Second update is we finally closed our partnership agreement with the team in Africa. So now Crowd Wall Street will officially be establishing our office in South Africa, which is going to be awesome. So more updates to come with that once we get all the legal documents together. I think that's about it. For those who are interested to contribute to our campaign, I'm gonna post the link in here. Hopefully you guys can see it. All we asking, minimum $25 to help see it grow. We also offer perks for those who contribute to our platform, so make sure you read the campaign. That's about it. So just to get to it, again, I don't have no PowerPoint because I just want to have a conversation to talk about startup versus small business. I know a lot of us who are new to business, we think in some shape or form it all means the same thing. But in the business world, especially when raising capital, it does not mean the same thing. There are some differences when it comes to having a startup and having a small business. And so today we're going to go over the difference between the two, and then you guys understand why you should know the difference, especially getting into business, and it'll help you in the beginning stage on creating a stronger foundation. A lot of times people get into business just to make money and really don't have no vision for the business, don't know why they want a business. They just want to be their own boss, but they don't have no game plan on why they want to be an entrepreneur, or why they want to be a business owner. So the first thing is understanding what is a startup. Many of us think a startup is just a company that's just getting started, and many times we use that terminology for that. But in the business world, when you're talking to investors and venture capitals and private equity firms, they look at startup totally different. So they define startups as a temporary organization. A temporary organization. That's really what they identify a startup, right? So when they define a startup must be a scalable business, must have a scalable business model. Now, there's a difference between growth and I think I went out, but I think I'm back. Internet been acting up. All right, give me a thumbs up if you can hear me. I think the internet is kind of acting up. Oh, I see all these comments. All right, cool. My bad. I told you I got to flip screen because I don't know who on what. All right, cool. All right, so where I was at, scale up startups. So startups, the way startups are defined is, as a startup, you have to be scalable, right? And I was just explaining there's a difference between uh growth, and there's a difference between growth and scaling your company, right? So when you're growing your company, your revenue is increasing, as well as the resources and costs it takes to grow your company. So if you're looking to grow your company, you may put more money into marketing, you may put more money into hiring, sales agents, more employees, right? So you may pour out more money into resources to help the revenue grow. That's growth, right? So the revenue is going up as well as your costs. You're still growing the company, but it's costing you to grow that company, right? That's growth. Scaling is, how can I grow my company with the least costs, right? So scaling is similar to, just to give you an example, somebody who's doing consulting, right? If I'm consulting somebody, the way I grow my business is to gain more clients to consult, which is going to require what? More of my time, which I may have to, advertise more, but it's requiring more of my time. I'm growing my company by consulting with more individuals. So this week I may start off with 5 clients, but next week I want to go up to 10. That's growing, but it might cost me a little bit more to grow to that level of doing 10, 15 clients, right? Scaling, in the same scenario as a consultant, scaling to say, okay, how can I take my knowledge and my information, and instead of having 10 clients next week, how can I have 50 to 60 clients where it doesn't require my time? So now you have what? A course. So that's why now you have online courses. That's a scalable company, because now I'm able to scale my company where I can acquire more clients that cost less money. So all I have to do is create a course, and now instead of me just limiting myself to 10 clients, now I can have 20 to 30 people, right? So that's the difference between having a scalable model and a growth model. The next thing they look at with startups is major impact. Think about Amazon, think about Uber, think about Lyft, think about Google. All these companies made a major impact in the industry. This is what they was considered startup companies, right? So that's the second thing. The third thing is, when you look at these companies like PayPal, Stripe, all these companies that's raising all these different funds from investment funds, from VCs, when you really look at their financial statements, a lot of these companies are not profitable at all. They're not making no money. They're bringing in revenue, but they're not making a profit. Why? Because these companies are not focused on profit first. These companies are focused on product market fit. They're focused on ironing out their business model to make it make sense, right? So now, when you're talking about a scalable company, they're not looking at making a profit. Like when Amazon came out, he wasn't looking at making a profit. Uber, they wasn't looking at making a profit. They're focused on, how can I perfect this business model to receive funding and to scale this company to the next level, right? So that's what we're talking about, scalability. Scalability mindset and the growth mindset is completely different. You can't use the two, right? And all of this is identified as a startup, what a startup is. And we're going to get deeper into this, right? So let's talk about small business. Small businesses are more sustainable, and they're more about growth. Small businesses in today's, like your local markets, your restaurants, they're not thinking of scalability. They're thinking about growth. That's why they're putting more money behind marketing, because they're trying to acquire, more customers. They're trying to hire more employees because they're trying to grow. And the more they're trying to grow, the more money they have to put in resources, right? The second thing is, when we're talking about investments, right? As a small business, they don't really seek high net worth investors like VCs and private equities or angel investors. They're more so getting their funding from either the banks, credit cards, or lines of credit. And then when you're getting these loans from the banks, it's not that much. The average loan you could probably get is 10, 15, $20,000, versus a scalable startup. They're receiving their money from, high network investments or investment funds, venture capitalists, private equity, angel investors. And that's why you see on the news that this company raised this amount, it'd be like $1 million, it'd be $300,000, $400,000, because these investors are looking for a higher return on their investment. And I'm gonna explain that too as well. Typically with a small business, you get lower sales. there's a cap to how much you really can make. Not all small business, but majority of them, there's really a cap to what you can make as a small business, because in most cases, most small business are in saturated markets, right? Just think of a hair salon. There's a lot of hair salons in one community. There's a lot of hair salons in one region. So there's a cap to really how much you can make, because there's a lot of competitions around it. And that's why mostly small businesses are really creating in some shape or form, um, paycheck to paycheck, so to say, right? They're looking, most people that's running a small business, they're just looking for sustainability. They're just looking for passive income to come in, whether they're working on a job or not. They're just looking for income to sustain them, to make sure their bills are paid and things of that nature. When you're talking about a startup, and a startup in the sense that's looking to scale their company, they're looking for they're looking for a big return on their investment, right? So a startup can start off with $10,000, $15,000, but they're looking for an acquisition down the road. They're looking to either sell their company or they're looking to go public. So they're not even worrying about profit right now. Versus a small business, when you open up a hair salon, a barbershop, a restaurant, you're looking to make a profit day one. The moment you open it up, you're trying to make a profit. Startups that's looking to scale their company, they not worrying about that. They're just looking at generating revenue and trying to make an impact where now they attract investors. And the thing is with that is, when you attract a VC or a private equity firm, what you get with that is expertise. So a lot of these VCs, they not only invest in these companies, but they also bring in their resources and their expertise into these companies and looking to grow that company and scale that company to the next level. And that's the difference too. When you're talking about startups, they have to move fast. And I explained this before when I talked about VCs, because when you're targeting VCs for investments, these VCs are managing other investors' money, and they have a time frame when to deploy that money to get an ROI. So if you ever get a VC funding, they're looking for you to grow that business at a high rate. Versus a small business, you can kind of play around with your time. You can take your time and build that business because it's on your own time. Startups, you automatically have to grow. You have to do it quick. How can I figure this out quick? How can I start gaining customer acquisitions? How can I start getting product market fit? How can I start getting social proof? How can I scale this company quick? Because that VC has a time frame between 5 to 10 years or even 8 years to try to find a return on their investment for their investors, right? That's why when you're dealing with startups, they have a higher risk. I'm going too far. They have a higher risk, right? So let's talk about the key difference between a startup and a small business, right? The first one, as I discussed, the growth intent. The growth intent. I'm going through all this because you have to understand the difference. And when you understand the difference, it change your mindset on what type of business I want to get into. Do I want to start a small business? Because a lot of times people get into small business and think they're going to become millionaires. And the reality of it is, based on your business model, based on the industry you're in, you may never hit $1 million, just to be honest, because you don't understand the foundation that you're building for the business, or you don't understand the industry that you're getting into. You don't understand whether you are a startup, you're being innovative, or you're just a small business trying to maintain and make, trying to make ends meet, right? So growth intent. When you're talking about startups, startups want to disrupt the market. Think about Airbnb. Airbnb was a startup. Airbnb is not a small business. Airbnb mission was to disrupt the market, the hotel market. So no matter how much time it took for them to be profitable, and in some cases, some businesses are never profitable, right? And even when these companies go public, they're not profitable, because the whole objective is they want to find a way to be disruptive in that market. And that's what Airbnb goal was. That's what Uber goal was. They had to see, how can I scale this company at a higher rate and disrupt the market, right? That's one thing. Small business, as I explained, their whole objective is not to be disruptive, not to be innovative. They just want to make a profit and they just want to make a living. And that's why you look at some of these big corporations that went out of business, they would be somewhat considered a small business or a large corporation. A lot of these businesses was not innovative at all. and they end up losing out on those startups who became innovative. So when you're talking about growth intent, these are the two different mindsets. When you're looking to start a business, understand what side of the scale you want. Do you want a small business, or do you want a startup where you create a scalable model? And in most cases, when you look at scalable models, technology comes to play. Now technology is a big factor when it comes to business. That's the easiest and fastest way to scale your company, because it's the cost effective way of taking your business to the next level via technology. The second thing, as I discussed, financial investment. When you're starting a business and you need funding, it's important for you to understand, where can I get financing from, right? So if you're on the small business side of things, you have options of bank loans, credit cards, applying for line of credit, or grants, right? And then in most cases, when you're talking about banks, most banks will not lend to you if you're just at the beginning stage, because you're a high risk, and banks don't like risk. Then many of you don't have the proper credit, so you can't get credit cards or line of credits on top of that. So if that's your area, if you want to build a small business like a restaurant, hair salon, barbershop, or something like that, now you have to get yourself in order on getting your credit together, learning about business credit, understand how it is, how can I apply for grants and qualify for grants, understand how banks operate to get loans. So these are the avenues you have to take as a small business to get funding for your company, right? To grow it. The second thing, if you on the other side of the seesaw of talking about startups, now in the beginning, you may have to start off with maybe a line of credit or your credit cards, or what we call the friends and family rounds, or now crowdfunding. But that's not the all be all, because eventually I have to create a business model that's acceptable and may attract VCs, because that's what we're going to call later rounds, like follow-on rounds, where now I have to attract VCs and private equity firms. And the reason you have to understand it too, because I had people that contacted me and say, hey, I hear about Crowd Wall Street, I see the things that you've been talking about, and I'm looking to raise capital from a VC. The first thing the VC is going to ask you, which is my third thing, is what is your exit strategy? And I did a whole video on that. You can check that out on YouTube. Go to Crowd Wall Street. What is your exit strategy? If you don't have an exit strategy, no VC is going to want to deal with you at all. If you're not planning on being acquired by another company, or you don't plan on going public, 99% of the chance you're not going to get a VC funding, because these VCs, when they invest in your company, they're looking for a return on their investment, because they have investors that need their money. They need they return on their investment as well, and they needed at a fast pace. That's why a VC is willing to put up the money and also help you through the process, because they want to see a 2x or 3x multiple on their investment. So understand, like, as a small business that's local, like your local, hair salon, your local barbershop, restaurant, grocery store, you would never get a VC funding, because there's no scaling opportunity for your business at all. So then you may have to lean to a business loan, or you may find some, local investors that may want to invest in your company and share up equity, and they may share revenue and things of that nature. But if you don't have a scalable model, or you're trying to disrupt things and you're looking to take your company to $1 billion in valuation, no VC or private equity going to deal with you at all. And really, that's where the money is at. So understand that. Understanding your exit strategy. What is your exit strategy when you're starting a business? Next thing, let's talk about. I talked about a little bit innovation. When you look at small businesses, many people that get into small business, they already get into something that's already been proven. Hear me out. When you're getting into small business, you're getting into something that's already proven. Let me explain. If you want to sell taxes, it's already been proven how to sell taxes. If you want to do credit repair, it's already proven how to do credit repair. If you want to get into a restaurant business, it's already proven. Like, the business model is already proven. That's why the growth rate, or the scale, I won't even say scalability, the growth rate is very limited to how much you can really make in these businesses. It's only so much you can make because again, the business is saturated. Not saying you can't be profitable. I'm not saying that. What I'm saying is there's only so high far as revenue that you can go, far as profitability, because now you're in competitions with 20, 30 companies because everybody doing the same thing. Everybody doing the same thing. That's why you only see one Airbnb. You only see really one Amazon. There may be little Amazons here and there, but not the Amazon. You only see one Walmart. You only see one what's another one? You got Uber, you got Lyft, right? So they kind of still in the same, but they're both scalable companies, right? But when it comes to small businesses, it's very saturated and it's okay. I'm not saying anything's wrong with that, but you have to be okay with that. You have to understand what type of business model that you're willing to accept. So when you're getting into small businesses, understand that there's really a limitations of what you can make unless you decide to innovate and scale your company to something different, right? So when you're talking about startups are really creating something new or better, right? So going back to the same companies that we are familiar with, Airbnb created something better. The hotel space, or the hotel space already existed. It existed for years. So, excuse me, Airbnb really didn't create nothing new. They created something better. They was very innovative of how they did it. So if you're really looking to take your company to the next level, you have to learn how to study your industry and sit back and say, how can I innovate this? How can I create something better and scale it? Right? So that's really what startups are. So when you think about it, the lifespan of these two businesses, for number one, startups. Let's go with small business. Small businesses, it says that 32% of small businesses fail within 3 years. 32%, which is a good number. But when it comes to startups, 92% of startups fail within 3 years. And when you understand that, it makes sense why. Because for years, even I have said it, like we always talk about 90% of businesses fail, right? And we talk about we going to cash, mismanagement, lack of marketing, and things of that nature. But in reality, I think that only serves 32% of the small businesses that go out of business. Because think about it. If you start a small business that's already into a proven business model, the only way you can fail is if you lack business management, whether that's managing your business or managing your cash. You lack marketing skills, you're not getting customers, right? These are the things that fit that category, because any small businesses that starts, you already in a proven market. So if you want to start a barbershop, it's already proven people need to get their haircut. So if you get into a barbershop, if you fail, it's on you, because the business model's already been proven. There's barbershops here today that's still operating and making money, right? So that's how I start to look at things. Now, when we're talking about businesses that's failing, a good piece of that has to be at that 32% of small businesses that go out of business because of those things I mentioned: lack of business management, lack of marketing, lack of cash management, and things to that nature. Now, the 92%, a big bulk of businesses failing comes from the startup world. And the reason it makes sense, because again, like I defined for you earlier, startups are temporary organization, right? When Amazon, Lyft, Uber, PayPal, Stripe, when all these companies started, they was actually doing an experiment. They was trying to figure out, how can we make this better? Forget making profits. How can we make this better? How can we make an impact in this world, right? So it didn't matter if it took 1, 2, 3, 4 years, because their whole objective was to perfect this thing. And if they have this great idea, they would get backing from the VCs and private equity, because they want to see this thing manifest. Because these VCs and these private equity, they already know, if I put 100 grand behind this company or 300 grand behind this company, and this company go public, that's a payout for me. That's a big payout for me. Or of a larger company buy out this company, that's a big payout for me. So these VCs are willing to put up money behind these companies and try and test out this idea. And some of the times it doesn't work out. So a big portion of startups failing is behind the fact that it's an experiment. Every time you have an idea that's innovative, that's disruptive, it's going to go through an experiment phase. When you think about Facebook, when you watch the Facebook movie, what he was doing, he was in there, Zuckerberg was in that room, and he was experimenting. Which why, if you look at financial statements, when you look at these big companies that's going public, or even these companies that are public, when you look at their financial statements, you'll see a lot of money going towards research and development, because they always trying to find a way to innovate. They always trying to find a way to be innovative in their market. How can I disrupt the market? That's why they spend a lot of money in research and development. So that's why a lot of these businesses, like the high percentage of businesses failing, is because of these startups, because these people are experiencing innovative ways to disrupt the market. And then when you think about Jansky, but when it does work out, boy, exactly. That's why some of these people don't mind putting in the work, because once they find, like, think about it, once Lyft figured it out, once Uber figured it out, once Airbnb figured it out, you talking about $1 billion valuation, people becoming millionaires off of that. And then the thing is, once an entrepreneur figure out a startup and end up raising capital and it doesn't even matter. A lot of these entrepreneurs probably created 3 or 4 businesses that fail, and it doesn't bother them, because they came in with the mindset of saying, I'm going to get it right the next time. And the moment they get it right and take that company public or get acquired and end up becoming millionaires, they have a higher success rate on creating more businesses. And I was just having a conversation earlier, and I was basically saying, I was telling my wife this too. You have a lot of companies, a lot of entrepreneurs who only create companies just to either sell it or get brought out. Only do that. And here it is, we have some of us starting businesses and we fall in love with it. This is my baby. And you got people that say, look, I'm going to create this business, turn it into $1 billion valuation, and I'm going to sell it and I'm going to make $5-10 million. Then I'm going to turn around and do it again. Or I'm going to turn around and become an investor and invest in other entrepreneurs and make millions that way. So that's the thing. Now, can you turn one into the other? Like, can I start off as a small business and turn into a scalable company? Most definitely. Most definitely. You can start a business and turn it into a franchise. You can turn, like, look at it now, like with some restaurants, not even talking about Uber, right? Let's say some restaurants that implemented delivery. I know now some pharmacies are implementing deliveries, not talking about Amazon, anything like that. One way a pharmacy is able to scale their company and say, you know what, how can we implement deliveries? Because now we implement deliveries, now we can make our automation process more efficient, because now I don't have to hire that many employees to facilitate medications. Now I could just deploy out 2 or 3 drivers to go out and deliver to 5 to 6, of our clients, right? So if you have a small business and you looking to scale your company to the next level, understand the difference. You don't want to grow it where the cost and your revenue is at the same length. Scaling is, I want to grow my company, but I want to keep my costs down. So these are the things you have to think about when you're talking about either growing your company or scaling your company, right? So the whole idea is understanding, when you get into business, understand the foundation that you're building on. Many of us don't even know what our exit strategy are. We don't know what our exit strategy is. We don't know whether we want to work in our business for the rest of our life, or work into and then stay, or we just want to create a 9-to-5 job for ourselves, right? So these are the things that you need to think about when we're talking about crowdfunding. One of the things we teach is this: understanding where you at in your business and where do you see yourself 5 to 10 years by now. If you've been seeing my podcast that I've been doing, that's one of the things I ask. Like, what do you see your company 5 to 10 years from now? If you're looking for VC funding, you need to create a scalable model. If you're not looking for VC funding, if you're not looking to give up, that's another thing I forgot to mention. If you're looking to scale your company to get VC and private equity funding, and be prepared because of your equity to these investors. And if you raise an equity round too early in your business, then 5, 10 years, or maybe 3 years from now, it might not even be your business no more. So these are the things you have to consider. So when we're talking about building wealth, generational wealth, these are the things that we have to think about. How can I create a business not only for it to be sustainable, but also in a way where I can leave a way of creating generational wealth that could be passed down to, whoever, your spouse, your kids, your auntie, your uncle, your dog, whoever, right? So understand there is a difference. That was pretty quick. Any questions? Any questions? Let me see if I can read these comments. Definitely, Jansky, be more creative. All right, so that's pretty much it, man. I hope you learned something. Like I said, I didn't have my PowerPoint today. I usually have a PowerPoint so you guys can have a visual of what I'm talking about. But the whole idea, man, I just wanted to actually get you guys to understand that there is a difference between having a startup and having Sears, Kmart. A lot of these companies went out of business is because maybe in the beginning stages it became scalable. It wasn't scalable, but then after the fact, it became a proven business model. And that's what happens with small businesses. When you get into a proven business model, in most cases, you're not thinking about innovation because you don't want to sit there and think about how can I be innovative in the restaurant industry, which is happening, right? With COVID, the restaurant industry is being innovative. Now you see curbside pickup, right? Now you're saying, he's going to be innovative now, right? So understand that, like, if you're in a small business right now, there's nothing wrong with that, but you just have to be willing to accept the fact that there's a limitation on how much you're going to make. Now, if you're looking to really grow and really to create generational wealth or create multiple streams of income, one of the things I may teach you is about how to create a holding company. Now you can create a holding company and have multiple businesses under that holding company. But if you're running a business, and I mean actually you're running a business, like the business doesn't operate without you, it's going to be very difficult for you to create passive income for yourself. All you're doing is creating another job for yourself, which is fine. If you accept that scale and you're trying to grow, sometimes it can be difficult for those individuals to grow and scale a company because they're busy working a job. They're working, 10, 12 hours on the job. So they don't really have time to sit back and find out ways to be innovative and grow and scale their company. But true entrepreneurs like you have, which I might make this another topic, Jam. Hey, Jams, we might make this another topic to talk about the difference between being self-employed being a small business owner and being an entrepreneur. There's a there's three different to business. And many of us, especially our black and brown people, we fall into the self-employed arena. Like many of us are alive about that, so you can understand the difference between the three. Because everybody says they entrepreneurs, but not really understand what an entrepreneur really is. Being self-employed is really not an entrepreneur. And we'll go over that in another live, but I hope you guys understand, man. Give me a thumbs up if you got it. Share this video if you learned something. The whole purpose again was just getting you guys a clear vision of understanding what a startup is and what a small business is. So those that's on here that's looking to get in business or already in business, you know exactly where you stand at or know exactly what it is that you want to accomplish. Where the money's being made in the startup arena. We see these companies all the time. And most of these companies we are investing in the stock market. Most of these companies that's in the stock market that's going public are startup companies. You don't see small businesses going public. And not saying to get away from it. No, small businesses are important for our communities, which is why the limitations of growing that company is very limited, because most small businesses are really only created to serve their local markets. Unless you have an online business where you can expand via online, but most small businesses are only created to serve local markets. So when you think about that, if I'm only creating a business and my only clientele is my local markets, how much money can I make? Especially if I'm doing the same thing everybody else is doing. Now I'm just running my business to maintain for sustainability. I'm just looking to bring in some type of profitability where I'm able to provide for my household. So if you want that for your business, then that's the way to go. But if you're looking to scale your company and you're looking to be innovative and you're looking to hit a larger market clientele, like you're looking to go global, like a big market, now you're talking about a startup. Now you're talking about how can I be innovative? How can I be disruptive? Now you have to do more market research and see what's out there and how can I get into the tech space, excuse me, to make a larger impact. That's all I'm saying. Understand your foundation, understand your vision, understand your exit strategy. Many people trying to get VC funding and don't have an exit strategy. They don't have a scalable mindset. So that's done for this live. This Wednesday we will be starting back our podcast. The month of January and I believe February is almost booked up. So I got some interesting entrepreneurs and business people that's going to be on this live starting this Wednesday. Also make sure you join our Facebook group if you're not on it, Crowd Wall Street group. Make sure you subscribe to our YouTube channel, Crowd Wall Street. Everything is Crowd Wall Street across the board. Also, like I said before, we are collecting contributions so we can launch our equity platform. That way you guys will be able to invest in companies before they go public, right? So if we was talking about startups and things of that nature, you will have the opportunity to invest in these companies at their early stage. Like I always say, imagine invested in Airbnb, Amazon, Uber before they went public. With crowdfunding, you have an opportunity to do that. Even as an entrepreneur, with crowdfunding, you have an opportunity to raise capital via crowdfunding. And the good thing about crowdfunding, there's no credit check. So if you got bad credit, you can raise capital. I mean, I still highly suggest you get your credit fixed, but crowdfunding is going to be a game changer for a lot of businesses, whether it's small businesses, whether it's startups. But I put the link below. Check out, and you can learn more about Crowd Wall Street and the things we have planned, for minority businesses. And that's it, man. I appreciate you guys for getting on this live. We got more Sunday trainings to go over, more topics to talk about. I know Jamsky, we're going to be doing lives, and Shantae may be doing lives. So the whole idea is, man, we just want to educate our people especially take the time that you guys gave me, so you could go back and join your son this video, and I'll catch you guys